Block, previously known as Square, released their latest quarterly figures after the market closed on Thursday. Now, we already talked about the disaster quarter for Intel, the good quarter for Amazon, but weakish guidance, which now the stock is down, I think, around 8% or so. Quite a good buying opportunity if you ask me. We've talked about the great Mercado Libre. All of those videos will be in top right corner. Right now, Block is up only 3.9%. It was up closer to 5-6% after hours. But overall, you're still buying a company that is doing quite well, growing. The stock itself is also becoming cheaper and cheaper, as I've discussed in the 4 stocks to buy in August. Block was one on the list. Year to date, stock is still down 20% or so, year over year down 22%, has a market cap of around $40 billion, forward PE 16.8 times, price earnings to growth at 0.41. So yeah, I think you're still buying here a quality business that is now much cheaper than before. They did also make some big announcements, which we're going to discuss in just a second. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. We're well on our way to reach 50,000 subscribers, so thank you very much for all the support. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So to summarize the big changes announcements, so we first talk about sales. They're appointing Nick Molnar, I think he's the founder and co-CEO of Afterpay, to lead a centralized sales function focusing on improving sales performance, expanding the sales team, and leveraging Cash App's customer base. As for partnership, they're expanding partnerships with food distributors and other large companies, especially in the United States, to increase distribution and reach more customers. Marketing, they're increasing marketing investment, focusing on fewer verticals and campaigns for better return on investment, and adopting a multi-channel business-to-business approach. The last one, simplifying onboarding, pricing, and packaging to improve customer experience and drive product-led growth. More recently, they have been ramping up their investment in their partnership ecosystem with strong emphasis on scaling their distribution network. They are seeing this work begin to pay off. In the second quarter, they signed multiple partnership agreements with large food distributors, including US Foods. They are now partnered with some of the largest companies in the food and beverage ecosystem that have critical relationships with up to 40% of the restaurants in the United States. They are also exploring more partnerships in international markets that will extend and augment their sales team. They've had some successful distribution partners outside the United States, including banks in Japan and the UK, that have been important to standing up for their go-to motions in those countries. Let's be honest, Cash App UK, complete disaster, and I believe it's closing down. And so as for the Q2 highlights, so gross profit continues to grow. It's up 20% year over year. Of course, growth year over year is slowing down a little bit. Cash App gross profit reached $1.3 billion, up 23% year over year. Square gross profit increasing 15% year over year to reach $923 million. Operating income, 14% margin, $370 million in operating income, up quarter over quarter and of course year over year. Adjusted operating income margin of 18% and adjusted operating income of close to $400 million. You can see here the nice increase quarter after quarter. Net income reached $195 million with a 9% margin. Yes, it's down quarter over quarter, but I believe in Q1 there was a one-time thing. There was usually ups and downs when it comes to the bottom line of the business. Adjusted EBITDA came in at $759 million with a 34% margin. Now let's continue here with a couple of extra things, Cash App, Square, and the overall business. So they say your Cash App Borrow has resonated well with their customer base with more than $2 billion in originations in the second quarter. That's up nearly 3x year over year. Cash App Card monthly actives increased 13% year over year to reach 24 million. As for Square revenue and gross profit, they generated $1.98 billion of revenue and $923 million of gross profit, up 9 and 15% year over year. Growth in Square gross profit was driven primarily by their banking products and software and integrated payments. They say Square GPV in their US market grew 6% year over year, and Square GPV in international markets grew 19% year over year, or 22% on a constant currency basis. International gross profit was 34%. International gross profit was up 34% year over year as they observed continued improvements in product attach rates, most notably banking. Square GPV mix by seller size, that is also growing nicely. Percent mid-market sellers sits at 41% right now. Gross profit markets outside the United States came in at $121 million, and that's 13% of Square gross profit. Also, as you can see, growing nicely year over year. Not that fast, but slowly. They saw strength in banking gross profit that was driven by continued strong demand for loans and their ability to find opportunities to deliver lending solutions to their customers while maintaining underwriting discipline. Square Loans facilitated approximately 142,000 loans totaling $1.45 billion in originations, up 32% year over year. There's definitely more emphasis on the banking aspect of the ecosystem. As for Cash App revenue and gross profit, they generated $4.13 billion of revenue and $1.30 billion of gross profit, up 12 and 23% year over year respectively. Excluding Bitcoin revenue, Cash App revenue was $1.52 billion, up 18% year over year. They have 57 million actives, $1,243 inflows per active, and so the monetization rate sits at 1.53%. That's up 9 basis points year over year and 5 basis points quarter over quarter, primarily driven by Cash App Borrow, which we've spoken about just before. As for Cash App inflows, that increased 15% year over year, but stayed flat quarter over quarter. I believe Cash App GPV did drop quarter over quarter. As for Cash App Pay, that continued to grow with volume up more than 7 times year over year and 18% quarter over quarter. And so the earnings. So the year over year improvement in operating income and adjusted operating income was driven by gross profit growth across their Cash App and Square ecosystems, as well as a decrease in operating expenses on a year over year basis, basically the perfect combo. As for balance sheet and cash flow, during the second quarter of 2024, they issued $2 billion in senior unsecured notes due 2032. Including the net proceeds from this debt offering, they ended the second quarter of 2024 with $10.3 billion in available liquidity, with $9.5 billion in cash, cash equivalents, restricted cash, and investments in marketable debt securities. So again, very healthy balance sheet. As for buybacks, in the second quarter, they repurchased 5.7 million shares for an aggregate amount of $390 million. They still have $202 million remaining. But that said, they did announce a new $3 billion buyback program. Now, as for guidance for Q3, they expect gross profit to grow 17% year over year, adjusted EBITDA margin of 31%, and adjusted operating income margin of 14%. As for 2024 outlook, they raised it yet again. They also raised it last quarter. So gross profit expected to grow 18% now, adjusted EBITDA margin of 33%, and adjusted operating income margin of 16%, and Rule of 40 sits at 35%. They raised their full year guidance to reflect outperformance in the second quarter and their improved expectations for the remainder of the year. They remain focused on achieving Rule of 40 in 2026, which they calculate as gross profit growth plus adjusted operating income margin. Their updated guidance for the full year equates to a Rule of 35, an increase compared to the prior guidance of Rule of 32, and an improvement compared to the prior year. And so looking at the graph right now, nothing much has changed. On the weekly, we still have a red candle. Maybe during the day, it will find more buyers and we can end the week on the green here. But overall, I mean, you're still buying the same company, even better right now, cheaper, more profitable, still growing. So they really found a way to do all of that. Well, finally, it's about time they reward shareholders. So that's about it for this video. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.